Upon news of Bear Stearns and JP Morgan in a quote-unquote deal, $2 per share, we were convinced the market was going to plummet come Monday. But in fact, the market ended up higher. So I just wanted to grab you, Jim Cramer, because I think a lot of people were curious as to what were the, I mean, obviously there's more confidence in the Fed.
Well, I mean, something happened this weekend that was really pretty interesting. Wherever you went, people were saying what's going to happen Monday. It became the widely anticipated crash. I was part of that. I felt on Sunday night because as soon as I saw Bear at $2, I said, well, we have to crash because what it says.
And the overseas markets were plummeting.
Right. And well, you know, what it says, frankly, is that if you had a stated book value, it may be worth as felt very Enron-like. What happened subsequently was that there was a rush into real companies that don't have, I call them the banks, the new companies that we know have a lot of capital that have hard assets, so whether it be the Caterpillar or CSX is a good example. But I think that when everyone anticipates a crash and you're -7 on the S&P oscillator, which is the one that I follow, that I pay for, and you have so few bulls, it's very hard to crash. It would have been great. I mean, I know this sounds strange, but it would have been great if we had crashed, because one of the things I find is that short sellers always come back after a couple days, and a lot of the owners of stock are just skittish or traders, and I want to just kind of wash out the weak hands. It's entirely possible when we were up at 417, and then we had the big sell-off after that, we did wash out some weak hands. But it would have been, I wish we had the darn crash. Sure. Now, the fact is that we had a major liquidity event. Throughout this period, the Federal Reserve has always been behind, and you always felt that all they had was rate cuts. I mean, they came up with a fancy facility, but they didn't put it in place immediately where you could you could send them some bad bonds and they'll give you some cash. But the one thing that I had always felt was that they would not be able to arrange a quick bailout, and that we were all at their mercy. They did it. Now, of course, obviously, JP Morgan's the huge winner, and you could say, remember, we always were worried about the moral hazard. Well, there it was. I mean, we just, Bear equity gets wiped out. JP Morgan gets to make a lot. JP Morgan gets to make, $10 billion if you look at how much JP Morgan stock up. So I think that what did happen was when everyone was looking for a crash, we didn't get it. Does that make it so that next time we may not realize it? No, we're oversold. We get the bounce. We get the Visa deal. I think the Visa deal is going to be very positive. The only thing that was surprising about last week after the 417 was that we didn't keep going up because we were so oversold. But this time it feels like we're going to, and I would urge people to not sell yet.
So is that going to be the pattern until we reach a bottom? There's going to be
that's what's so difficult, because there's a lot of businesses that aren't doing well, but we've also come down a huge amount. I mean, we were down 13% going into this morning. That's a lot. Down 13% from a high is really a lot, with the Fed cutting rates and with the Fed now finally doing something else besides cutting rates. This was the first time that wasn't creative. I mean, everything has always been, all the Fed things have been done, like these little, try to get LIBOR down or do this Treasury auction facility, and none of them were working. So finally what happened, because none of them were working, is a major firm went belly up, and then they had no choice, and they came in and they did something that was very Resolution Trust-like, which is what I've wanted. And it also seems like they're giving Fannie Mae the green light. This forced their hands to be like, it was interesting because they said, the articles were saying that this is like no other Fed. Well, no. I mean, what happened is that now they're realistic that the companies are going to go belly up. And I don't, they had been saying, well, I expect banks to go under, but I don't think they expected Bear to go under. And this really jarred them into the recognition that they really have to do much more and basically just say to anybody who needs money, we have it.
All right. Thank you very much, Jim Cramer, discussing the not crash that we had yesterday. This is Wall Street Confidential. Stay tuned.
That's your action point. Take advantage of it.